We saw credible rumors that will probably turn out to be true over some amount of time, which is that large banks like BNY Mellon have exemptions from SAB 121 and they can begin to custody Bitcoin. The entire industry's been waiting for too big to fail banks to start to custody the asset. And any of that clarity is going to send a very clear buy signal to traditional investors. 99.9% of the money in the world is held by people that don't have the majority of their assets in Bitcoin. And so that's going to be a big deal. When you move from 99.9 to 99.8 to 99, to 98 not participating, those are mega moves in the asset. And so those are the primary catalysts that just kind of came across the wire in the past few weeks and even in the last few days. Then when you actually saw the last administration, you saw positive speeches and characterization of Bitcoin as a digital asset. In fact, Gary Gensler, Jerome Powell, Christine Lagarde, and Janet Yellen all acknowledged it to be a legitimate digital asset. They said Satoshi created something innovative and real.
Could Bitcoin truly be the asset to safeguard your wealth in the years to come? Michael Saylor thinks so. And in this interview, he breaks down why Bitcoin might be the only financial hedge you need against inflation, economic turbulence, and even government control. With Wall Street giants like BlackRock now eyeing Bitcoin and new regulations on the horizon, the stage is set for a seismic shift. Will you be ahead of the curve or left behind? Stick around to see why Saylor believes this is a once-in-a-lifetime opportunity that could redefine what it means to invest.
There's an emergent appreciation that Bitcoin is digital gold or it's digital capital and it's a new asset class. And BlackRock has been driving the education effort there. I mean, Larry Fink going on CNBC and saying this is a different asset class. It's a hedge against monetary debasement. It's a hedge against global chaos. And so this is it's the idea of gold from thousands of years, but it's coming back with a big tech twist. It's gold on a big tech network with all the things we love about technology, mobile phones, the internet, computers, AI, smarter, faster, stronger. And everybody wants to get on the next big tech trend. And so first of all, that's driving it higher. And that's the fundamental idea is what if I could transform digitally? What if I could digitally transform capital? There's $450 trillion of wealth in the world that we could just call long-term capital. Rich people just want to stay rich. Other people just want to keep their money. And so that capital sits in the buildings behind you, Mario. It sits in land. It sits in the S&P index. It sits in art. It sits in bonds. It sits in sports teams because those were the best ideas for the past 100 years. And now Bitcoin's a new idea. It's a digital building. The Fed pivot, we just saw the Fed move from tightening monetary policy to loosening monetary policy. And that's good for all assets, but traditionally that's even better for global digital capital like crypto assets. I think, and that's going to be a trend that'll continue for quite a while now. The only thing that Bitcoin needs to win is just to be acknowledged as a legitimate asset class. When money managers like Fidelity or BlackRock point out that this is an institutional grade asset, a digital gold, a digital property, or a digital capital, that's the most important thing that's happened in Wall Street in 40 years. And last week, BlackRock published a white paper where the headline was Bitcoin, a unique diversifier. And they said not only is it a legitimate asset class, by the way, the regulators help with that. When the regulators approve spot ETFs and when they approve options trading, they're signaling to all these traditional old money investors that this is not tulip bulbs, this is not a scam, this is legitimate. So Bitcoin represents a new asset. If it's a high performing asset, right, and it's the best performing asset in 15 years, it's up like 48% in the past 48 months versus versus the S&P looks like a 12 or 13% performer. It's a performing asset. It's a new asset. And now you have $11 trillion money manager that writes a white paper and says it's unique and it's not correlated. So if it's not correlated, that means the 60-40 portfolio can be replaced with a 55-35-10 portfolio. And so do the quick math on what happens when 10% of hundreds of trillions of dollars flows into an asset that only has 450 Bitcoin a day available from natural sellers. That's $20-25 million a day of natural selling. It's not that much. And so when people reallocate their investment portfolio, then that's very bullish for the asset class. Which is that large banks like BNY Mellon have exemptions from SAB 121 and they can begin to custody Bitcoin. The entire industry's been waiting for too big to fail banks to start to custody the asset. And you can imagine if your bank wouldn't let you hold Apple stock or you couldn't hold a bond, probably those assets would be less valued. And so bank custody is a big deal. The third was after the market closed on Friday at 4 p.m., we got an SEC notification that option ladders have been approved on BlackRock's IBIT spot Bitcoin ETF. That's a huge deal because if you can trade options, you can bring leverage to the market, and that's a new class of investors, but you can also start to hedge the market. And so that really elevates the quality of Bitcoin spot ETFs in the marketplace. And after November 5th, we're going to have much more regulatory clarity and consistency. There's massive pressure on both political parties in order to bring a digital assets framework to marketplace. And any of that clarity is going to send a very clear buy signal to traditional investors. 99.9% of the money in the world is held by people that don't have the majority of their assets in Bitcoin. And so that's going to be a big deal. When you move from 99.9 to 99.8 to 99, to 98 not participating, those are mega moves in the asset. And so those are the primary catalysts that just kind of came across the wire in the past few weeks and even in the last few days. Gold may be regulated, but it's also worth like $15 trillion, and Bitcoin is worth $1.3 trillion. So if we end up with the failure of gold, Bitcoin 10x's from here. So in terms of being regulated, it is regulated, right? The IRS regulated in 2014 by saying it's property, you have to pay tax on it when you sell it. And it's regulated via these ETFs. So if you're an institution and by charter you have to own securities via a regulated custodian or via a regulated bank, you're buying FBTC or you're buying IBIT. Just like the SEC just approved options trading, but only on IBIT. So there are regulations. The regulations solve the issue of custody. They solve the issue of compliance. And that's why these spot Bitcoin ETFs are the most successful ETFs in the history of Wall Street.
Michael Saylor paints a vivid picture of Bitcoin's potential to reshape the global financial landscape, comparing its value and scarcity to that of digital gold. He explains how Bitcoin's independence from traditional asset classes makes it a game changer, particularly as more institutions and major players like BlackRock and Fidelity begin integrating it into diversified portfolios. Plus, with regulatory clarity on the horizon, he suggests that Bitcoin could move from the fringes to a mainstream asset, altering investment strategies worldwide. Curious to learn how Bitcoin could fit into your own financial future, or why Saylor sees Bitcoin at the core of a new era in finance? Watch till the end for insights that just might reshape your outlook on wealth, security, and the future of money itself.
When dozens and dozens of public companies started buying Bitcoin and were approved by the SEC to buy the Bitcoin and list, that was a fourth endorsement. Then when you actually saw the last administration, you saw positive speeches and characterization of Bitcoin as a digital asset. In fact, Gary Gensler, Jerome Powell, Christine Lagarde, and Janet Yellen all acknowledged it to be a legitimate digital asset. They said Satoshi created something innovative and real. And by the way, they classified it as a speculative asset but not as a currency. The real uncertainty around Bitcoin has been around its use as a digital currency, not as digital capital, right? If you're holding something and you want to do 10,000 transactions without any AML KYC at any size, now you're crossing over banking regulations and currency regulations, right? And that's highly controversial. But what's not controversial is whether institutions and individuals and corporations in the Western world can own property. So where it's illegal to own property, then Bitcoin is in a regulatory gray zone for sure. But where it's legal to own property, you're going to be able to own it. And I think we've crossed that chasm between 2020 and 2024. It's quite obvious, right? If BlackRock is handling the asset, if there's 100 public companies handling the asset, if the SEC is approving options trading on the asset, and if the CME trades commodity options approved by the CFTC, it's pretty obvious that the asset has been adopted and is supported by the regulators. So I think we're past that question. The time for you to worry is 50 years from now, when all the money in the world is Bitcoin, when Bitcoin is 450 trillion and it's worth, go figure, $50 million a coin, and then the currency of the country you live in is backed by Bitcoin, then you might see that, what'll happen? The more likely thing is that currency, the whatever yo-yo dollar, will be pegged to Bitcoin, and then someone will take over the government and said, hey, we're going off the Bitcoin standard. But they're not going to get rid of Bitcoin. But if you go to Bitcoin treasuries, you'll see that 95% of the Bitcoin isn't in these ETFs. 20 for every dollar of Bitcoin in the ETF, $19 is not in the ETF. So Bitcoin is already a global asset outside the control of any nation state or any company or any actor. And that's what makes it so special. Bitcoin's the crypto asset that has unambiguous regulatory clarity and global consensus everywhere in the world as a commodity, as an asset, and it has the most certainty, not just in the crypto universe, right? In the financial universe. If you're looking out 100 years and you're buying Bitcoin, you want to buy 1/21 millionth of all the money on the network, and you want people to acknowledge that, oh, I just bought this because I want to hold one block out of 21 million blocks at Manhattan in cyberspace. And so think of Bitcoin as Manhattan in cyberspace.
Saylor's insights underscore a transformative future where Bitcoin is a staple asset, influencing everything from institutional portfolios to global financial stability. Whether you're a crypto enthusiast or just starting to explore, understanding Bitcoin's evolution is key. Keep an eye on the post-election landscape as Bitcoin's journey is only just beginning. Thanks for watching, and stay tuned for more insights into the world of Bitcoin and beyond.